Hey guys, welcome back to Clownfish TV. This is Kneon. I am not here with Geeky Sparkles. She's actually out today working the election, so you're stuck with me for the next couple of videos. So I'm going to give you a daily dose of dismal Disney, but not as a duo, I guess. We're going to talk about Disney stock dropping after the announcement of AT&T merging Warner Brothers with Discovery to compete with Disney Plus. Now, the two things seem unrelated, but they actually seem to be very, very related if you look at it, because this new Warner Media Discovery thing is going to compete head-to-head with Disney Plus, and Disney did not do that well with its numbers. We're going to talk about that and how it has affected the stock. The stock has dropped, and people are like, don't worry, everybody, it's fine. It's all fine. Disney's fine. Don't worry. And yeah, they probably are. But it is interesting to watch how the stock market reacts to Disney underperforming during Q2. And they did. They didn't do very well. In fact, a lot of news outlets calling it out. Yahoo Finance calling it out. Q2 revenue, they missed estimates. And their subscribers fell short. And now their stock kind of suffered for it, although it does look like it's going back up a little bit. All right, so we're going to talk about that before we get into it. Please subscribe for more pop culture news, views, and rants, guys. We're over 190,000 now, so thank you very much for the support. We do talk a lot about Disney. We do operate the piratesandprincesses.net Disney news website. Geeky Sparkles actually runs that. You can go out and check it out at piratesandprincesses.net, and we do offer up our opinions and news on Disney and everything going on in Disney. And we put this up yesterday that the Disney stock was dropping. In fact, it's still down overall. It is picking up a little bit more, but it's definitely, just in the last 5 days, it's really gone down. And then if you look at the last month, it becomes even more apparent. Yeah, look at this. Guys, this is the last month of Disney, year to date. It started out pretty rocky in January. Now they're kind of going right back down. So we're gonna talk about this. They were in a really bad place last year because of the pandemic, and then people got all excited about Disney Plus, and now it's starting to go back down again. And a lot of that, it's because of Disney Plus, right? Disney Plus is what they're pinning everything on at this point. Now, granted, theme park attendance is back up, and with the vaccines and the relaxation of some of the mandates, that I do think that the theme park attendance is going to pick back up, but they're still kind of missing the mark, right? We can go out to Yahoo and see that they missed their estimates. They missed their revenue estimates. They did $15.61 billion versus the $15.85 billion they expected. They talked about how Disney was killing it, crushing it with Disney Plus. And they said, however, the company exited its second quarter with 103.6 million subscribers, missing estimates for 110.3 million, according to Bloomberg. Again, it could be debated as to why they missed the mark. A lot of people think that it had something to do with the canceled Disney Plus hashtag that came about after the firing of Gina Carano. Some people think that, they just ran out of their free Disney Plus and they canceled. Other people got bored. They checked out. They might have hit a ceiling. Whatever the reason, that actually is a pretty big miss. Right. And they're going to slow down anyway, because they're starting to creep up on Netflix numbers now. And it took Netflix how many years to hit that? So we're going to hit a ceiling for sure. Disney's direct-to-consumer streaming platform lost $290 million in the quarter, though it's expected to be profitable by the end of 2024, Disney's management has said. So they're spending a lot more money than they're making. Disney's Media and Entertainment Distribution Unit, which as of late 2020 include Disney Plus, as well as the legacy studio and network businesses, posted revenue of $12.4 billion in the second quarter, missing the estimates for $12.64 billion. The segment's operating income, however, topped estimates. So that's good, I guess. Yeah, so this is, it wasn't good. And they're actually saying, if you listen to the earnings call, they said that they're expecting Q3 and Q4 to not be very good. That they're actually preparing stockholders to be like, yeah, Q3 and Q4 not going to be so good. So what happened? Well, the stock dropped, and part of it might have had to do with the news that AT&T is getting out of the entertainment business. They're taking Warner Media and they're pairing it up with Discovery Plus, and Discovery Plus is already a Disney Plus competitor. I mean, it's nowhere near Disney in terms of numbers, but it definitely is a streaming competitor. And now we've got Warner Media, which has HBO Max, teaming up with Discovery Plus to create a new entertainment streaming service / entity that's supposed to rival Netflix. It's going to be one of the biggest entertainment companies on the planet. So that, coupled with Disney Plus's declining subscribers, meant that people were kind of checking out on the stock. Now, this is yesterday. It's still down. It's not down as much, but I think the low for it was around $85 last year. I think it dipped down to about $85 when they closed all the theme parks down. People were like, ah, shit, what are we going to do? The theme parks are closed. We don't know how long they're going to be closed. And Disney Plus wasn't up to speed. And then they pulled a rabbit out of their hat. Oswald, I don't know, Mickey, whatever, Jessica. They pulled Jessica Rabbit out of their hat, and they were able to pull off some numbers with Disney Plus. We could debate those numbers probably, but it made the investors happy. And so far, they've been selling investors on the dream that someday your prince will come, and your prince will come bearing fat stacks of Mickey money, fat wads of cash. That's what they were hoping for. And then it turned out that they missed the mark. And so now they're calling it the dip. Should you buy the dip? Buy the dip in Disney. And this is, again, coming from Yahoo Finance. For a company that was tagging all-time highs as recently as March, Disney shares have grown quite soft in recent weeks. Mickey is flaccid. Poor Minnie. We've seen a more risk-averse sentiment creep into the equities since interest rates started popping last quarter, specifically in relation to tech and growth stocks, but Disney is very much the opposite. Still, their shares are down more than 15% in the past 2 months and have given back quite a bit of their post-pandemic economic reopening-related gains. God, that's boring. They closed last week close to their 2021 lows. And again, this is because their subscriber count's down. That's what they're all citing. They're all saying their subscriber count is down. Now, I would say that long-term Disney stock is probably a safe bet, for sure. I know I've lost some money over the last couple months with Disney, but I think that they're probably a safe bet. I do think that things are going to stabilize. I don't know if they're ever going to peak as high as they did before. But it's interesting that, we've got Motley Fool here too, saying the same thing, that they're like, well, Disney, for the long term, Disney's a good investment, but short term, not so much. Not so much, guys. Churn's not an issue. Disney's fine. Everything's fine here. And Hulu did really good, and so did ESPN. So yeah, I mean, it's interesting to see the media kind of be like, yeah, hey, Mickey's not looking so hot. Not looking so hot. I do believe that the Warner Media merger did some damage because people were like, oh shit, here comes a new challenger. HBO Max wasn't that much of a threat, but HBO Max with Discovery Plus pumping tons of money into new content, they absolutely could be a threat to both Disney and Netflix. CNBC said, this is yesterday, the media giant's share price sank 2.6% after it missed revenue and streaming subscriber estimates. They missed. It's kind of like daddy daycare. I missed. It's all over the ceiling. So we'll see what happens. I mean, I don't expect Disney to skyrocket again anytime soon. It's going to be interesting to see if the media falls out of love with Mickey before they're like, Disney can do no wrong. Disney's great. Everything's fine. It's all fine. All it takes is one slip up, right? That's all it takes to have them turn on you. So I'm going to wrap this one up. Please subscribe for more pop culture news, views, and rants, guys. We'll talk later.